Oh yeah, guys, get hyped. This one's Databricks. I'm telling you, this is gonna be huge. You might not know what these guys do, so you're gonna wanna watch this video. I'm as excited about this as anything I've been excited for. Whether they do an IPO or direct listing, it's gonna be massive. This one and UiPath are gonna be huge for 2021. I did a video already on UiPath. These are the two that are on my radar. Watch this video to get all the information and due diligence you need on Databricks. So what is Databricks? The hype video in the background is going to show you some examples. I'm also going to talk to you and explain what the company is all about. So Databricks is the data and AI company. They really pride themselves on taking data and artificial intelligence and machine learning and making what they call unified analytics. They really truly believe that those things have to be together, have to work together for the analytics to make sense for a business. With origins in academia and the open source community, the company was founded in 2013 by the original creators of Apache Spark, Delta Lake, and MLflow. Built on a modern Lakehouse architecture in the cloud, and I'll get to that later, Databricks combines the best of data warehouses and data lakes to offer an open and unified platform for data and AI, artificial intelligence. Today, more than 5,000 organizations worldwide, including Shell, Comcast, CVS Health, HSBC, T-Mobile, Regeneron, rely on Databricks to enable massive scale data engineering, collaborative data science, full lifecycle machine learning, and business analytics. Headquartered in San Francisco, they are San Francisco.
The heavens have become a part of man's world.
With offices around the world and hundreds of global partners, including Microsoft, Amazon, Tableau, Informatica, Capgemini, and more, Databricks is on a mission to simplify and democratize data and AI, helping data teams solve the world's toughest problems. All right, guys, more information about Databricks. So they are the only open, unified platform for data management, business analytics, and machine learning. You'll also hear it called ML for short, machine learning. Now, Databricks provides a unified open platform for really all of your data. So they're not just a business analytics company. They're not just a data management company. They're not just data warehousing. They're a combination of different things. And I'll explain as we go through the video, but they compete with different vendors in certain areas, but they also partner with those same vendors as well. And we're going to mention Snowflake, Google. It empowers data scientists, data engineers, and data analysts, all three of those. And Databricks is from the original creators of some of the world's most popular open source platforms. I mentioned them in the beginning of the video, but Apache Spark, Delta Lake, MLflow, and also Koalas, which wasn't mentioned earlier. It builds in these technologies to deliver a true Lakehouse architecture, combining the best of data lakes and data warehouses. And we'll kind of explain what that means here in a minute. For a fast, scalable, and reliable data platform, Databricks is built for the cloud, and data is stored in low-cost cloud object stores, such as in Amazon Web Services, AWS S3, or in Azure Data Lake Storage, with perform and access enabled through caching, optimized data layout, and other techniques. So we're going to talk about Snowflake here, and I think it's important. Snowflake was a huge IPO for 2020. It was one of the biggest ones I can remember in a long time. And Databricks really does compete in a similar space as the much hyped Snowflake, helping customers find the data to power the algorithms that help with everything from picking which products to order to which candidates to bring in for job interviews. Now, I'm going to go into more detail later on in the video, so you're going to want to see that. I'm actually going to look at the valuation of Snowflake as well and compare them, because these guys do a lot of similar things, but they also focus on different areas as well. So this was in Forbes, and this is very recent here in the last couple of weeks. Databricks raises $1 billion at $28 billion valuation, with the cloud's elite all buying in, again from Forbes. And so you end up having this $28 billion valuation. It could have actually been higher, and it might still end up being higher before they end up going. And this could either be an IPO or a direct listing. If it's a direct listing, I'm okay with that. Sometimes we can get a better price that way. Now, some of the investors in here, this was actually not real surprising, but it was pretty impressive to see, because they got more backing from all the big names than even Snowflake, which I think speaks a lot to the CEO, the company itself, the direction that the company is moving, and the potential as an investor that we could have. So Amazon Web Services invested. You had Google's Alphabet Google. You had Salesforce in there, so they have CRM Ventures or Salesforce Ventures. Microsoft was in there as well. So you got those big four. Those are the big four in the cloud space, right? And these guys actually invested in Databricks, which is interesting. All the dominant cloud partners, which already have Databricks integrations and partnerships, were logical investors. So all these guys already work with Databricks, and it was a logical investment, but still pretty impressive to see. Up next, it's time for the Magic Quadrants. Ha ha ha. No, just kidding. So Magic Quadrants, we've been covering these on most of our SaaS and cloud related type stocks. Of course, Gartner Research does these. Now, this is as of November of 2019, and the source is Gartner, February 2020. This is the most recent one that I could find out there. And you can see that it shows Databricks kind of in the middle in the leaders, but there's kind of a lot of leaders. You actually see Alteryx kind of in the middle there between leaders and challengers. You see MathWorks. There's a bunch of companies that you can't actually own stock in. Microsoft is down there. There's Google down there, etc. Anaconda. But what's important to note here, guys, is that this is the Magic Quadrant for data science and machine learning platforms. Okay, so when you look at Snowflake, for example, that's going to actually show you data warehousing, and you're not going to see Databricks on there. So I'm going to talk a little bit more about the differences and the similarities of the two companies here later in the video, but I wanted to show you this Magic Quadrant because I do think these are important. Okay, guys, so while we're on the topic of Databricks and Snowflake, I want to do some comparisons and just check them out here. This is the CNBC Disruptor 50 list. You'll see that Databricks is actually 36. It gives you a nice little bio. If you haven't checked out this list, I definitely recommend it. There's another one I'm going to show you here in a second from Forbes. It has this nice little write-up here that I thought was good I'd share. 6-year-old Databricks, a technology startup based in San Francisco, is on a mission to help data teams solve the world's toughest problems, from security, threat detection to cancer and COVID-19 drug development. It does this by building and running a data and AI, artificial intelligence, infrastructure platform so customers like Comcast, Shell, Expedia, Regeneron, to name a few, can focus on the challenges that are central to their own missions. So where's Snowflake? Snowflake is actually 40th. I thought that's interesting. So Databricks is 36, Snowflake is 40. How about the Cloud 100, the Forbes Cloud 100 list? Snowflake, number 1, and then you got Stripe, then you got UiPath. If you have not watched the UiPath video I did, check out the channel. You can see a link above. It's a great video. That one talks about Robotic Process Automation, RPA. I'm really excited about that. It could be a direct listing or an IPO. It's probably going to be a direct listing, but check out that video as well. I'm most excited about UiPath and Databricks for 2021, and I'm just as excited about these two companies as I was for Snowflake in 2020. But you'll see here, Databricks is actually 5th, and you can see the funding numbers and everything on there. But I thought it was interesting just to show you that Snowflake is number 1 here, Databricks is number 5. Obviously, on both of these lists, they rank really high, and I think that's important to realize as potential investors, that the cloud community respects these companies. Now, Franklin Templeton led the round, which brought that $28 billion valuation. There was a lot of investors. I think it was oversubscribed by 2x. Databricks ended with a $425 million annual recurring revenue in 2020. So $425 million, that was up 75% on the year, which is solid growth, of course. It actually was less. I want to note that number was less than what Snowflake put up for 2020, so that's something to keep in mind. The tech giants jumping in, Microsoft for the second time, they'd already invested in Databricks, all operate cloud platforms that integrate with Databricks so they can stack onto each other. Now, the high dollar investment from all these big companies, from investment banks all the way to the big cloud players, that's driving more interest in a potential IPO for Databricks. The CEO has said that he's interested in an IPO or a direct listing, and it would follow the footsteps, as we mentioned, of one of the biggest data warehousing companies in Snowflake. That ticker is SNOW. That was obviously a blockbuster offering last year. For comparison, Snowflake's last private funding round raised $479 million at a $12.4 billion post-money valuation. The IPO carried a $33 billion valuation and was the largest software IPO in history. Databricks actually could be bigger than this. So stay tuned because you want to see some of these numbers. During a CNBC appearance, Databricks founder and CEO said the company will likely go public this year in 2021, and the option of a direct listing is definitely on the table. There he is. There's the CEO. So the $1 billion funding will accelerate Databricks' ability to scale and support the Lakehouse's rapid adoption, which the CEO, Ali Ghodsi, believes is fueling its growth. Here's a quote: "Built on a modern Lakehouse architecture in the cloud, Databricks helps organizations eliminate the cost and complexity that is inherent in legacy data architectures so that data teams can collaborate and innovate faster. This Lakehouse paradigm is what's fueling our growth, and it's great to see how excited our investors are to be part of it." Now, this shows you an example of, on the left-hand side, this is a first-generation platform. You basically had structured data that went through an ETL to a data warehouse and then out to BI reports. And I actually sold systems like this, and I sold systems like B, and I started to sell systems like C, and recently resigned. But this is the future on the right-hand side. The middle one there, that was the current two-tier architecture, which you still see a lot of. It's semi-structured and structured and unstructured data. So all those, and it goes into a data lake. You've got the ETL, you've got the data warehouse, you got data science, machine learning, reports, and BI. So C is kind of the next level, and that's taking the Lakehouse platforms. So you still have that structured, semi-structured, and unstructured data. It goes up into the data lake, but now you have metadata, you have caching, and you have an index layer, and then that goes up directly to BI, reports, data science, and machine learning. And Ali Ghodsi talks a lot about garbage in, garbage out. Obviously for analytics, this is something that we've talked about in the BI space for a long time, but you need quality data in to get quality data out. But this Lakehouse platform can actually help make that happen, help businesses be more effective, more efficient, and have better KPIs, better analytics for their executives and their team. Now, guys, obviously part of our due diligence as investors is to look into the management and most importantly being the CEO, because our investing dollars really is in their hands. So it's important to have a solid management team and a solid CEO. I can tell you that Ali Ghodsi is one of the best CEOs in Silicon Valley. He's not your traditional Silicon Valley CEO. He's becoming more of the more common CEO that you see in Silicon Valley, though. Alexander Karp, they're not, I don't want to compare the two, but their backgrounds and academics are very similar in that way. So he's the CEO and co-founder of Databricks. He's responsible for the growth and international expansion of the company. One thing I will say is that this company is not a sales-driven organization, which normally I do not like, but they have made a lot of strides in this area. And what I do like is the fact that Ali is a very likable guy. He's smart. So he can actually explain the products really well because he literally is a developer that helps create it. He was one of the creators of Apache Spark. So of course he knows what he's talking about, but people like him. He can explain it really well, and he's a very personal guy. So I like that a lot in his character. It's actually interesting because you can see this article up here, and I won't read the whole thing, but it kind of compares, it talks about Frank Slootman, who was originally with ServiceNow and then now is the CEO of Snowflake. And it says, it's not uncommon for companies to bring on CEOs skilled at taking startups public prior to their own offerings. Snowflake, for instance, poached Frank Slootman, who led the IPO ServiceNow and Data Domain before that for its own offering. And so part of the success of that IPO, a lot of people think, is because of Frank Slootman. So Frank Slootman's more of that traditional CEO that you think of Silicon Valley, and Ghodsi is very much kind of the new, the more modern, the modern age CEO is the way I would put it, I guess, for Silicon Valley. And he talks about that's not the approach for Databricks. It'll be the first time that Ghodsi has led a company to a public offering. So these professional CEOs, this is a quote, these professional CEOs very rarely are good at that because they don't really understand the products that your company is selling. Oftentimes what happens is that you have great technical founders. They start the company, you launch the product, but you don't really hit your revenue targets. Then the board looks at making changes to fix that. That's basically the death of the company long term. Now, the devil's advocate to that is that you cannot succeed without a really good sales team. Now, I used to be, on those sales teams in this space, so I understand what it's like, and it's very cutthroat. But there are certain companies that don't do as well. Like PagerDuty is one where they could, I think, in my opinion, do better if they had a little bit better sales team. And the companies that have the really impressive growth generally have really impressive sales teams and impressive sales leadership. And that sales leadership is able to bring those people and follow them. And it's very, people stick together. It's very cliquey, and you'll see that a lot where Slootman actually comes over, a bunch of the top, sales executives come over with him. So there's kind of a balance here. I get both sides of it, but I want to give you that perspective because it's kind of a fine line. He's also a professor at the UC Berkeley, and he's on the board at the UC Berkeley's Rise Lab, if you're familiar. The guy is really smart. He has an MBA. He has a PhD. People like working for him. They have a really good culture at Databricks, and I feel like I have a lot of conviction and confidence in this CEO. All right, let's talk a little bit about Snowflake and Databricks together and their partnership, how they compete against each other as well. So it says, while Godsey says 2020 brought a significant acceleration of business, he declined to provide any up-to-date revenue figures. Databricks said in October that it passed a $350 million revenue run rate at the end of Q3, up from $200 million a year earlier. An acknowledgement that, despite COVID-19 gutting some sectors, the appetite for data analytics and artificial intelligence is still robust. Still, the competition is fierce, and despite notably partnering with Snowflake in 2018, so they actually partnered with Snowflake in 2018. If you go out and Google Snowflake and Databricks, you can find all kinds of different sites and blogs and work that they did together, a partnership that still continues today, believe it or not. A lot of people might not actually know that. And that's the thing with a lot of these companies actually compete and they also work together. And the reality is this, you guys, there is so much total addressable market. TAM, there's so much TAM that a lot of people can still make a lot of money. It's a huge ocean of fish and there's a lot of fish to catch. And that's why you see these partnerships and this strategic partnerships like this. So Databricks faces an increasing rivalry from current industry darling, Snowflake, as well as Google's BigQuery. Now, this is a quote. For data science and analytics, those are really going to be the three competitors. Okay, I'm going to say that again. For data science and analytics, those are really going to be the three competitors. They're saying Snowflake, Databricks, and Google BigQuery, those three. Now, I would probably consider a couple others, but this is what Sapphire Ventures co-founder Ja Das, which I'm probably slaughtered his name, that's what he says. The market is still so big, kind of what I was saying earlier. The market is still so big, I think all three are going to be successful. Good stuff. Okay, continuing on. While similar offerings are available from Snowflake and BigQuery, the release is Databricks' way of championing the data lakehouse that we talked about earlier, or a combination of curated information along unstructured data. Typically, they reside in two different stacks, often referred to as a data lake. You hear data lake all the time with Snowflake. If you watch my Snowflake video on the channel, it talks about data lakes, and that's a vast pool of information. And then a data warehouse, a more structured storage center. That's something that you heard years and years ago. So it kind of goes data warehouse and then data lake. And now you've got this data lake house. Okay, so that's like the evolution of the data warehouse. And more product announcements are in store for 2021 as Databricks looks to capitalize on its fastest growing industry sectors, including healthcare. Listen to this, quote, Databricks is behind the scenes of pretty much all the vaccines that are being talked about. Again, Databricks is behind the scenes of pretty much all the vaccines that are being talked about. That is huge, Godsey said. He added, healthcare providers are using it to track inventory and how crowded their hospitals are. Despite Godsey's best attempt at downplaying the current financial environment and its influence on the company's next steps, it's clear that the competitors' successes are at top of mind. And the biggest event of Databricks' year will be held on Wall Street with the IPO or direct listing. It's a really, really good IPO climate, and we will be IPO ready. Okay, as far as the Databricks valuation, it marks the company as one of the highest valued private companies in tech, almost as large as where cloud monitoring service Datadog, one of my favorites, a Fired Up Wealth favorite. You can watch the top 5 growth stocks for 2021 and beyond. That has CrowdStrike, Datadog, and 3 others. Go check it out on the channel. So Datadog, so I want to say that again, almost as large as where cloud monitoring service Datadog trades, and about 1/3 the market cap of Snowflake. So not quite as big as Snowflake, but getting pretty big, which carries a market cap of about $80 billion US after holding the largest software IPO ever in September and is pushing its own data cloud now. Gotzi says Databricks round was oversubscribed by more than 2x. I mentioned that earlier, with investors being told that they had to cut back their allocations and the company could have easily raised $35 billion. So they only did 28. They could have done 35. The quote here says, "I've left some valuation on the table in every round," he says, because this is a long-term game. And as you eventually become a public company, you want those long-term shareholders to stick around. So he's got shareholders in mind already as a private organization, something I love to see as a potential investor myself. Now, Databricks has clear ambitions that they eventually want to surpass Snowflake, which got its start in data warehousing, an adjacent layer of a modern IT stack. That could prove awkward for the company's mutual investors. Franklin Templeton and Salesforce Ventures, at least, have backed both. At Franklin Templeton, Managing Director Jonathan Curtis says he sees each as having their own areas of strength and what is not a winner-take-all market. I agree with him. I actually agree with that. There aren't really other end-to-end vendors in such a large market that are doing as well as Databricks is. I also agree with that. So when the opportunity came up to invest in them, we jumped in, Curtis said. That's where the strategic cloud vendors could prove important in crowning a long-term champion. While Snowflake and others work closely with the cloud's biggest providers, few can say they are backed by all 4 at once, as I mentioned in the beginning of the video, giving Databricks a receptive phone line at each. Okay, so whenever Databricks decides to go public, if they decide to do IPO or direct listing, there are some things they need to address. And it says here that the company will need to do more to connect its technical vision of the future with current business realities. It talks about the truth is that AI isn't always proven useful in a lot of companies. Even data analytics tools can fail to live up to the hopes. The truth is AI is actually a spectrum. You can get very far with basic data insights. They don't need to be automated machine learning, he says. Then you have the really advanced end of the spectrum, which is in production machine learning, which I think we'll get to more and more, but he's saying that maybe not all the companies need that right away. But asked whether his long-term vision of AI-driven business remains too far in the future to resonate today, Gotzi pushes back, noticing that one top credit card company that already works with these guys has more than 80 distinct use cases for Databricks tools in operation. The future happens faster than people think. They look back and say, "My God, I can't believe the world we live in now compared to 10 years ago," Gotzi says. And the great companies are the ones that bet on those secular trends. And that's what I also like to invest in my portfolio for growth, secular growth trends. Okay, guys, I promised to talk to you about Snowflake's valuation and maybe compare Databricks and even UiPath to let you know where it might fall in the spectrum. And the reason I'm doing this at the end, well, the people that watch the video to the end, I appreciate you guys very much. I appreciate when you hit the like button, when you drop a comment, it helps the algorithm. If you are watching this and you're new to the channel and haven't subscribed, please do subscribe. Hit the little bell to get notifications. But this chart here is actually showing valuations, and it's showing some significant expensive stocks on this list. So on the very bottom, it shows percentages, and it goes percentage like 10, 20, 30, 40% on the bottom of that chart that you see behind me. Now that is the percentage year over year NTM revenue growth. I'll explain what NTM here is in a second. Now on the other side, you've got the X. So it starts at 0x and goes up vertically. That is the enterprise value, or EV, NTM revenue. Okay. So what is NTM revenue? So NTM revenue refers to a company's revenue over the next 12 months. That's NTM of operations. This financial measure is sometimes overlooked by buyers who are more focused on a company's future profitability and ability to generate future EBITDA. However, it can be useful to determine if a company's top line is growing and where the revenue growth is coming from. The next 12 months should be reviewed by a buyer, particularly if there has been a catalyst during the period, such as an acquisition or an introduction of a new product. So looking at that chart, you can see Snowflake is way over at 44x, and it's taking those two factors into consideration on this chart. These are the most expensive names by enterprise value, basically, based off of the most recent financial reports that we have. So you can see CrowdStrike, Shopify, Datadog kind of all in that stack. You see, JFrog's down there at 19.4. You got Zscaler, 31, Cloudflare, Net as 33, Coupa, Bill, Zoom's in there, Appian, Team. Now, Zoom actually should be a little bit higher on that list, I think, than what it's showing there. But the three best stocks in terms of basically just growth metrics was really four of them, and I own all four of them: Snowflake, Zoom, CrowdStrike, and Datadog. And you can see there's some other ones in there, Shopify. There's a couple different ways to do this chart, and it's not really that important, but what is important to show here is that Snowflake is really in its own parallel universe, completely out there. So the whole point of this exercise is to show you some of the stocks, because a lot of these stocks I actually own in my portfolio, and I sleep just fine at night because I understand this industry. I come from this industry. I have no problem putting money in these high valuation stocks because I feel like they can grow and that there's a TAM, a total addressable market. You have to do what's best for you. Obviously, I'm not a financial advisor. I can't tell you what to buy or what to sell. I think that both Databricks and UiPath probably will end up somewhere on this chart between where you might see CrowdStrike and Snowflake. Now, if you subscribe to the channel, of course, I'm going to keep you guys updated. So as information comes out on any of these stocks that we talk about, UiPath, Databricks, both of them could potentially be direct listings or IPOs. As that information unfolds, I'll keep you updated. Obviously, I also keep my Discord community updated as well. So if you want to join Discord, check out Fired Up Wealth Patreon, and you can join us there. Join the Elite Plus tier. We've got a masterclass in there. We've got daily live streams. Even my portfolio, my daily buys and sells. I bought a stock today that you can go check out right now. Anyway, guys, I appreciate your time and attention. I hope you have a great rest of your day. Take care.